high-earning Supersavers at Shell can save up to $88,250 in tax-advantaged accounts in 2026. Now, for those of you who are 50 and older, you can save even more. Let's talk about how. First, let's start with your Shell Provident Fund, your Shell 401k. Within your 401k, you can contribute up to $24,500 in 2026. Now, you can designate your contribution to be Roth or pre-tax, and this contribution limit is the combination of the two of them for you. Now, for those of you who are 50 and older, you get an additional catch-up contribution of $8,000. Now, starting in 2026, for high earners, the catch-up contribution of $8,000 has to be designated as Roth. Good news, Shell and Fidelity will automatically designate this as Roth for you. Now, in addition to your contributions to your 401k, Shell also contributes to your 401k. Shell's contribution is based on your years of service. For those of you with 9 or more years of service, Shell will contribute 10% of your base and bonus to your Shell 401k. Now, the maximum that they will contribute in 2026 is $36,000. Shell's contribution always goes into your 401k as pre-tax dollars. Now, lastly, we've talked about the pre-tax and Roth buckets within your 401k, but there's a third lesser-known bucket, the after-tax bucket. The after-tax bucket within your 401k has a separate contribution limit of $11,500. Now, with the after-tax bucket, that money goes in after it's been taxed. However, the growth is tax deferred, and then when you pull that money out in retirement, you are taxed on the growth. Because of this, many people choose to do what is commonly referred to as a mega backdoor Roth to optimize the taxes on here, converting your after-tax dollars to Roth so that they can grow tax-free and then be pulled out tax-free in retirement. I encourage you to watch my videos on the mega backdoor Roth to learn more about this strategy. Now, in addition to your Shell 401k, you can also contribute to an IRA. However, many people contribute to a backdoor Roth IRA because they make too much money to contribute directly to a Roth IRA, and they don't qualify for the tax deduction on a traditional IRA. To do a backdoor Roth IRA, you contribute to a traditional IRA. This year, the limit for that is $7,500. And then after you contribute to the traditional IRA, you then convert that money to Roth, so it will grow tax-free. Now, in addition to the $7,500 contribution limit, again, for those of you 50 or older, you have a $1,100 catch-up contribution, and so therefore you can contribute a total of $8,600 to a IRA in 2026. Now, with both the IRA with the backdoor Roth and then the mega backdoor Roth of the 401k, there are a lot of pitfalls with these strategies, and they can be very complex. So I encourage you to reach out to your financial and tax professionals regarding your unique situation. Lastly, for those of you who are on the high deductible health plan, you have access to a health savings account, or an HSA. The total contribution limit for an HSA in 2026 for a family is $8,750. Now, Shell will contribute $1,000 to your family's HSA, and therefore your max contribution for 2026 is $7,750. With an HSA, your contribution goes in pre-tax. However, what's great about an HSA is your money goes in pre-tax, but then you can invest it so it can then grow tax deferred. And when you pull that money out for qualified medical expenses, it comes out tax-free. So you never pay taxes on those dollars. This is phenomenal and very unique to the HSA. Now, all in all, if we sum these up, you can contribute up to $88,250 in 2026. And then again, for those of you who are 50 or older, that number increases to $97,350. Now, for those of you who are 55 and older or 60 and older, there are even more catch-up contribution options. Now, there's a lot going on here. Doing what you can will accelerate your path to financial independence and help you reduce your lifetime taxes by potentially 6 or even 7 figures. If you found this video valuable, I encourage you to like it and share it with your colleagues.